Good morning, friends. Welcome back. Today is June 7th, 2022. This is the second episode of State of the Market. In this episode, we'll discuss the structure of Nifty futures, Bank Nifty futures, and Reliance, which is about to move in a day or two. Okay, so first we'll look at what has happened in Nifty futures yesterday. The market opened around 16,600 levels, but was immediately rejected the day before's close or the day before's low. And immediately the market moved towards 16,437, which is the 200-day moving average. So basically, yesterday the market was about to break this 16,437 levels and then go down to fill the gap between 16,400 and 16,300. This is one gap which has been holding the market. If you can see the structure of the market, you will understand that this is the gap that is holding the market. This particular gap, you see this is holding the market very well. But what is happening is every time we go to that particular level, that is when we go to the 8-day moving average level of 16,440, we are getting a support. That is, short-term players are supporting the market. Now, if you look at the daily chart of Nifty futures, what is it saying? It is telling you that the short-term moving averages are supporting the market. That means short-term players are supporting the market, and the long-term moving averages are resisting the market. So if you look at these two moving averages, these are 50-day moving averages. This is a 50-day moving average, and this is 200-day moving average. And these two are short-term moving averages. That is 20-day moving average, which is a monthly average, and 8-day moving average, which is a weekly average. So now, why do I analyze like this? Why do I use moving averages primarily? The first point of contact to understand the market is moving averages. Why? Because if you look at the short-term moving averages, that is a weekly average or a monthly average, the short-term players are fighting their best to support the market to not break this small gap. The gap is very small. If you see, the gap is very, very small one, a very thin one. It can be easily broken, but they are still supporting the market as much as they can. But we have to break this gap. If this gap is supported by something like a 200-day moving average, then this gap would be strong. This is the way you understand gaps. Okay, so if you look at the gap here, it is a very thin one. It's a very small one. Excuse me. So it's a very small one. You see that this is getting supported by short-term players, that is weaker players. Short-term players are always weak players, and long-term players are always strong players. You see that if we break these two lines, that is the 200-day moving average and the quarterly average, which is a 50-day moving average, we will shoot up immediately, whether to the swing high or somewhere, basically to the swing high or one of the levels in this particular zone. That is how you should understand the structure of the market at a broad level, that is at a daily time frame level. So now that we understood what is happening, let's see what has happened intraday yesterday. So if you look at 16,440, if you let's go back and see what is the level. It is around 16,440 level. Don't be exact, like don't look for 3 or 4 points difference. So here, if you see, the point is here we have to break the 400 level. In terms of options, the 400 options guys should give up. Then we are going to look for the balance zone of this. So we will look for areas in this zone where the market can go. So yesterday, what has happened? The market tried to break that level. It almost went there, and then suddenly at 16,460, the market turned. What is the prominence of 16,460? So this is the level where, if you see, the market has been, it is one of the market profile levels where the market has been taking constant support. You see that 16,460 is the one where the market has been taking constant support within this zone, within this trading zone, within this particular zone, this particular small zone, it is taking support. Now, yesterday, when that has happened, the market continuously went up, but at a very slow pace. And you see the momentum also is aligning the moving average, 664-day moving average. So, what has happened? Yesterday, because of this particular move, what has happened? As I posted in our channel, yesterday, as I posted in our channel, the 500 put call ratio was brought down from 3 to 1.2 and then slowly took it up by 2.4. That means the put call ratio is still above 1, which means put writers are still strong. So they, on a daily basis, they are weak. The ratio has come from 3 to 2.6. But if you look at an intraday time frame, they have turned strong. That means they have fought back to safeguard that particular level. They have fought back to safeguard this 500 level. Yesterday, I told you that 517 is the level which is very important in terms of market profile. Now, yesterday, what has happened? This point of control has slowly gone up from 517 to 587. Now, today, what can we expect in Nifty? So, the shift in point of control from 517 to 587 indicates positivity. That means buyers are in control. However, if we cannot break that 587 today, and if we break the day low of yesterday, we are going to witness a lot of downside, especially below 400. However, if you see, the market closed higher and the PCR is up. That means put writers fought back at 500. So how can the market treat these players today? If you look at SGX, let's look at SGX, what is happening. We are trading around 460. I told you that 460 is a prominent level we have to keep in mind. If we break 460, if we open and break 460, then we are going to witness a lot of downside. And all these put writers who spent a lot of money at 500 yesterday, they have to give way. That is one hypothesis. The second hypothesis is the market can open above 590 and 610 levels, and it has to break this particular moving average 647 for it to go to the higher levels. So what should happen in Nifty today? We either the scenario is we break 400 and then go down to what to fill this gap. So if you see, every day my plan will have this component. We will break and fill this gap. And once we fill this gap, the weakness of all these players will be gone. Then stronger buyers will come and take the market again up until this particular swing is broken. Now let's see what is happening in Bank Nifty. First, we'll look at the daily chart and then we'll proceed to intraday chart. In daily chart, in Bank Nifty as well, the same situation is happening. Within this range, let's observe what is happening in this particular balanced range. That is, the market is fighting within this balance. It is going up, coming down, going up, coming down. This is 200-day moving average. That is, long-term players are not allowing the market to go up. Similarly, short-term players are supporting the market. So the market is not strong here. Unless long-term players come and push it, it will not keep going up. So yesterday again, we tried to break the shorter term moving average, but then we ended up slightly higher. I told you that 35311 is a key level where we have to break to test the balance in the bottom. To test the balance in the bottom, that is this particular balance, we have to break this particular moving average. Similarly, on the upside, we have to at least close about 35,650, which is a quarterly moving average. That is, you can say 50-day moving average, or you can take any number, but you have to keep in mind that this is a quarterly moving average. That's why you see there is no close above this level. Understand this point. If someone is looking at daily charts, they will look at only the candles, how they are forming. But here, understand the structure of the market. The market is not closing above 50-day moving average, and it is not closing below 8-day moving average, or let's say 20-day moving average. So even 8-day moving average, if you see, it is not even close below 8-day moving average. So everyone will be looking at a broader range, but let's narrow down. Let's understand the narrative, what Bank Nifty is actually doing on a daily time frame. It is not moving above 50-day moving average. That is, long-term players are not allowing it to go. And in short term, 20-day moving average, that is, monthly players are not allowing it to go down. Yesterday, it tried to go down after opening, but again, it was brought down back into this micro range. Okay. Now, today again, we will attempt to break this downside. If we have to take any upside, the only level you have to look at is 35, 650 or 683 levels. I'm not giving, these are not exact levels as I give in my channel, but giving you a framework of how to think about the market before you go into a trading day. Let's see what is happening on intraday time frame. You see, yesterday we could not break this level. That is, on a daily time frame, we could not break 8-day moving average, and here we could not break the long-term moving averages. So again, we have a rangy day here. If you see, the entire day was packed within this first bar. So this is how large players control the market. See, this entire day we have stayed within the first bar. This means even Bank Nifty volatility is being suppressed a lot for a larger move. So in Bank Nifty, our plan is to go long as we go above 36, 35, 680, sorry, and we should go short below 35, 311 or 35, 124. Between these levels, now how do you play between these levels? How do you play these intraday levels? That is where I use tools like market profile and order flow. And that is what gives the micro levels where we can play the market better. So on an intraday basis, we have to still break in Bank Nifty, we have to break 35,311 level. That remains a key level, which was not broken considerably yesterday. You see that we did not spend time below that level. And today we have to break that. On the upside, we have to break 35, 500 or 650 levels to get any considerable upside. Let's look at what is happening in Reliance. In Reliance is staying above all averages, all the short-term and long-term averages. However, the market is weak here. If you see, the market had a lot of momentum during the last swing, and now that momentum is not there. However, you should not just short the stock right here. You should wait for the narrative. You should wait for more information. What happens is, if the market is up today, the market will try to break this particular zone. The market will try to break this particular small micro zone. And then that's when you have to see what is happening to momentum. If momentum is not higher than this, then you can short the stock. Again, for shorting the stock exactly at intraday levels, we have to go back to intraday chart and see what is happening there. You see that yesterday the market tried to go up. You see in the first bar, the market tried to go up in the first bar, but it was immediately rejected because the momentum was not there. The momentum was missing. That's why you see immediately it tried to break down. Now today, my thesis is, if it goes, yesterday I put it in the channel, This level comes from market profile. You see that it is one of the confluence zone where all the players will be exiting the stock once it goes below 2750. So once this happen, a lot of steam will be off the market, and we can go to levels. The first reference level will be 2689. So probably we will hit this channel low here, and that will be my first objective if I am going short. What is the other scenario in Reliance? What can happen? So basically, the market, if the players want the Reliance to go up further, they can continue this particular range. This particular range, it can make a zigzag move here and then pick up momentum and then break the upside around 2852. This is where I will keep attempting the shorts with minor stop losses. Always remember, whether it is intraday or positional, your stop loss should be very small. The first indication that your trade is a failure or can be a failure is your stop loss is large. For example, if I am shorting the stock here right at 2773 and keeping a stop loss at, like, say, 100 points, so for a futures contract, it is always almost 25,000, which is not worth it. You should not take such risks. That is depending on hope. So you should always see whether I can get a trade with a stop loss of as small as like 2,500 or 5,000. That's it, max for a positional. For an intraday, I will not even go beyond 1,000 to 2,000 bucks, because protecting capital is paramount. It is more important than getting into a trade. That's all today, guys. We have hope we have covered everything in Nifty, Bank Nifty, and Reliance. Again, we'll come back with a new episode tomorrow. Keep following and subscribe to the channel. Have a great day, guys. Bye.